Hello, I'm 20%. Today, using the investment portfolio manager I built myself, I'm going to show you exactly how I manage my assets. Asset allocation, cumulative returns, and dividend income. I put all of it on one screen. This video is only a record of my own investments and analysis. It is not investment advice. What you're about to see is a simplified summary I prepared to make the explanation easier. The actual numbers were not exactly the same every year. In some years, I invested about $20.2 thousand. In other years, because my work situation changed, I made no new investments at all. Annual returns were different too. In some years, my returns were over 100%. In other years, I had losses. For the detailed year-by-year record, please refer to my earlier videos. So please understand what you see here as a reference summary prepared for explanation, not as a complete reconstruction of every original calculation. The core of this dashboard is how everything is linked together. The total value of the holdings entered in the allocation section is automatically synced to the return calculator as the current portfolio value. In other words, once I enter the data once, everything else updates together. At the top right are buttons for Korean, English, and Chinese. With one click, both the language and the currency change. I'll show you that later in the video. What you see now is a demo version with the data already entered. It matches my real holdings. Only the prices can change over time. I divide my assets into 5 categories: stocks, U.S. Treasuries, physical gold, real estate, and cash. My target weights are 40, 20, 20, 10, 10. That is a 4-to-2 to 2-to-1 to 1 structure. This structure is more than simple diversification. The point is to combine assets with different time horizons and different volatility patterns. Stocks are for long-term growth. U.S. Treasuries help me prepare for deflation and falling interest rates. Physical gold helps me prepare for a loss of confidence in money. Real estate helps hedge real-world inflation. Cash can serve as collateral for cash-secured puts, and it gives me dry powder when markets fall sharply. I believe this kind of portfolio reduces the chance that every asset runs into serious trouble at the same time. Let's start with the result. From 2018 to 2025, over 8 years, my total contributions were about $121.1 thousand. Roughly speaking, that averages about $15.1 thousand per year. And now, my total portfolio value is about $619.1 thousand. My total gain is about $498.0 thousand. My simple return is about 411%. My money grew to about 5.11 times the original amount. My IRR, or internal rate of return, is 35.5%. Now let's look at what I currently hold. TSLA, Tesla. This is the core position in my portfolio. TSLA is my largest stock position. I do not trust analyst price targets. For nearly 20 years, analyst targets for Tesla and for many other stocks have been wrong most of the time. If a judgment is truly worth trusting, it should be backed by evidence that has already been verified. An analyst's opinion is not evidence. My future strategy can be reduced to 2 ideas. First, a pyramid of deep, out-of-the-money cash-secured puts. If the price does not fall, I collect premium. If the price falls far enough, I buy at prices where I already wanted to buy. Second, after SpaceX goes public, I want to rebalance between Tesla and SpaceX. Next is GOOGL, Alphabet. This is my second largest stock position. I hold it as one of the infrastructure companies of the AI era. Next is AAPL, Apple. This is my smallest stock position. What I value is its strong cash flow and its ability to keep buying back shares. Next, let's look at U.S. Treasuries. I hold EDV. That is the Vanguard Extended Duration Treasury ETF. It is one of the longest duration U.S. Treasury ETFs. EDV currently makes up a large part of my portfolio. My reason for holding EDV is simple. If we enter a rate-cutting cycle, it may have a chance to produce larger capital gains. You can think of it as part of a structure where bonds can cushion the portfolio when stocks fall. But there is one issue. For Korean residents, ETF distributions count as interest and dividend income. If my annual interest in dividend income gets close to about $13.5 thousand, I may consider gradually moving into US strips that pay no distributions. I'll cover that topic in a separate video. Next is gold. I do not hold paper gold. I hold real, physical gold. As digital assets become more common, I feel even more strongly that I should keep part of my wealth in a store of value outside the digital system. That is why I plan to keep a certain allocation to gold over the long term. Now let's look at real estate. This property is currently going through redevelopment. In the future, I expect about $201.9 thousand in additional redevelopment contributions. At the moment, it is still in the redevelopment approval application stage. I currently treat real estate as roughly 10% of my total assets. I will update the final redevelopment terms and additional contribution amount after the plan is finalized. For now, I think holding makes more sense than selling. Finally, cash. I separate cash into US dollars and Korean won. This includes SGOV, dollar deposits, and won cash. Cash isn't just a balance, it is collateral for cash-secured puts. It also gives me dry powder when markets fall sharply. Now let's look at the donut chart and the allocation table. The donut chart shows the portfolio mix at a glance. The target is 40, 20, 20, 10, 10. Then I can see how far the actual allocation is from the target. The key part is the allocation table below. I do not use one absolute standard, such as plus or minus 2%, for every asset. Instead, I consider a range within plus or minus 10% of each target weight to be normal. For example, with a 40% target, 36% to 44% is within range. With a 20% target, 18% to 22% is within range. With a 10% target, 9% to 11% is within range. Asset categories have different target sizes, so it does not make sense to use the same absolute number for all of them. Now look at the bar chart. A solid color means the allocation is within range. Red stripes mean it is above target. Gray stripes mean it is below target. A check mark means it is within range. An upward arrow means overweight. A downward arrow means underweight. With this information together, I can decide more quickly what to buy and what to sell. I do not make those decisions based on emotion. I make them based on a system. If the portfolio status shows that it is healthy, I do not need to take extra action. I only move when an adjustment is actually needed. Now let's go to the second section, the return calculator. At the top, you can see that the total value from the allocation section has already synced automatically, so I do not need to enter it again. The key concept here is IRR. IRR is an annualized return that reflects when money was invested. If I enter the amount invested in each year, the system calculates a return that properly reflects the timing of those investments. Many investors look only at simple return. For example, I invested $67.3 thousand and it became $100.9 thousand, so I made 50%. But if that 50% took 10 years, the annual return is actually not very high. If the same 50% took only 3 years, the meaning is completely different. In other words, the result may be the same, but the performance is very different when time is different. That is what IRR helps make clear. Here I can see 6 key figures at the same time: total invested principal, current net worth, total gain, money multiple, investment period, and simple return. Now look at the yearly chart. Blue represents cumulative principal. Green represents estimated gains. As time passes, you can see the green area gradually grow. There is also a future simulation feature. If I add a future year, the system assumes that my past IRR can continue and automatically simulates how the portfolio might change in the future. This is not a prediction. More precisely, it is only a what-if scenario. It asks, if my past IRR continues, what might the future look like? The actual outcome may of course be different, but this feature is useful because it directly visualizes the effect of continuing to invest. The third section is dividends. This section is entered month by month. From January to December, I enter the dividend income received in each month. If I turn on the after-tax dividend option, the system follows the rules that apply to Korean residents and automatically deducts 15.4% withholding tax. Here I can see four figures at the same time: total annual dividends, dividend income tax, after-tax annual dividends, and dividend yield. For Korean residents, once annual interest and dividend income exceeds about $13.5 thousand, it is combined with other income for Korean tax purposes. In other words, once I cross a certain range, my marginal tax rate can rise quickly. So this dashboard gives a red warning as I approach that threshold. If I know early, I can respond early. There are broadly two ways to respond. First, I can shift part of the portfolio into assets with lower dividends. Second, I can gradually move into bonds, such as U.S. strips that pay no distributions. Right now, I prefer the second option. Capital gains from strips are not combined with other income under this tax treatment. They are taxed separately at 22%. So far, we have been looking at the dashboard in English mode. All amounts are shown in US dollars. If I switch to Chinese, all labels change to Chinese, and all amounts are automatically converted into RMB. If I switch to Korean, all labels change to Korean, and all amounts are automatically converted into Korean won. Finally, I switch back to English mode. I only need to enter two exchange rates: USD to KRW and USD to CNY. Based on those two numbers, the system automatically converts between all three currencies. I do not want to share this information only with Korean viewers. I also want to share the same information with English-speaking and Chinese-speaking viewers. This dashboard automatically saves everything you enter in your browser. At the top, you can see that the data has been saved. Even if you close the page, your last entries will still be there when you open it again. But there is one important point. This data is not uploaded to a server. It is saved only in the browser on your current device. The advantage is stronger privacy. My asset information is not sent outside the device. The downside is that the data does not sync automatically across devices. If I enter data on my iPad, I still need to enter it again on my desktop computer. That is a trade-off I chose to accept. Finally, let me briefly summarize today's video. Asset allocation: 4 to 2 to 2 to 1 to 1, with a plus or minus 10% decision range. Returns: annualized compound returns based on IRR with future simulation. Dividends: entered month by month with Korean tax rules reflected automatically. Languages: Korean, English, and Chinese, available with instant switching. At the time this video was made, 20% held TSLA, GOOGL, AAPL, EDV, physical gold, real estate under redevelopment, US dollar cash, and Korean won cash. I buy and sell over time. Some positions have been fully sold, some have been partially sold, and some have been sold and later bought again. I will make this dashboard available to members. If you have any questions, please leave a comment. I'll see you in the next video. I'm 20%. Thank you for watching.